Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Blackberry Limited annual report. Blackberry Limited offers a diverse range of businesses and services that cater to various needs of enterprises and governments worldwide. The company's secure communications segment provides secure solutions for messaging, voice, and video communication through its offerings such as BlackBerry Messenger, BBM, Enterprise, BlackBerry Secu Suite, and BlackBerry AtHoc. In addition to secure communications, the company also offers enterprise software solutions, including BlackBerry Dynamics, a development platform, and secure container for mobile applications. BlackBerry Workspaces, a secure enterprise file sync and share EFSS solution, and Unified Endpoint Management UEM solutions. These solutions enable enterprises to manage and secure their mobile devices and data. The QNX segment of the company provides software solutions for connected cars and other embedded systems. Its offerings include BlackBerry Ivy, a vehicle data platform that allows automakers to access vehicles' sensor data and apply machine learning at the edge to generate predictive insights and inferences. BlackBerry Limited also offers monitoring and telematics solutions through its Radar business, which provides real-time visibility into transportation operations. Furthermore, the company provides enterprise consulting and engineering consulting services to help clients implement its software solutions effectively. In addition to these offerings, BlackBerry Limited is involved in patent licensing, providing patented elliptic curve cryptography technology through its Certicom business. This technology offers device security, anti-counterfeiting, and product authentication solutions for various industries. Overall, BlackBerry Limited's diverse range of businesses and services enables it to cater to the needs of a wide range of clients across different sectors. BlackBerry Limited maintains a market capitalization of $2 billion, broadly in line with the industry peer group. BlackBerry Limited trades at a higher price-to-earnings ratio of 42 times and a higher price-to-book ratio of 3.04 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 44% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The share count has increased while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This also raised the question if that management is diluting shareholders to sustain the business. The share count has increased while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. This makes the investment case highly unfavorable. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of the provided data. In 2026, the company experienced a revenue increase of $14.2 million compared to 2025, reaching $549.1 million. This growth was driven by increases in other regions, which saw a 12.9% rise in revenue from 2025 to 2026. However, the gross margin also showed a decline in 2026, decreasing by $23.3 million compared to 2024. This suggests that while revenue may be increasing, the company's ability to maintain profitability is being impacted. Operating expenses also played a significant role in this trend, with research and development costs increasing by 4.4% in 2026. The data also highlights regional variations in revenue growth. While North America saw a decline of 1.4%, Europe, Middle East, and Africa experienced a 2.7% increase, and other regions saw a significant 12.9% rise. This suggests that the company's revenue growth is being driven by its international operations. In terms of customer concentration, the data shows that while one customer still comprised a significant 12% of revenue in fiscal 2026, This was down from 14% in fiscal 2025. Overall, these trends suggest that the company's revenue growth and decline are being influenced by a combination of factors, including regional variations, operating expenses, and customer concentration. The net income of a company underwent significant fluctuations between fiscal years 2025 and 2026. In fiscal year 2025, the company reported a net loss of -$79 million, but this improved to a net income of $53.2 million in fiscal year 2026, representing an increase of $132.2 million. The improvement in net income can be attributed to various factors, including a decrease in operating expenses and an increase in gross margin percentage. The company's profit margins also appeared to have increased, as evidenced by the rise in adjusted EBITDA across different segments. For instance, the Q&X segment saw its adjusted EBITDA jump from $11-15 million to $19.5 million. The revenue of the company remained relatively stable between fiscal years 2025 and 2026, with a slight decrease from $534.9 million in 2025 to $549.1 million in 2026. However, the gross margin percentage showed an improvement, rising from 73.8% in 2025 to 76.3% in 2026. Overall, the company's net income and profit margins demonstrated a positive trend between fiscal years 2025 and 2026, driven by cost reductions and revenue growth. The company's financial performance indicates a strong ability to generate cash from its core operations. As evident from the various pages referenced, there is consistent confirmation that the company is indeed generating positive operating cash flow. This is demonstrated through multiple statements on different pages, including page 32, 33, 39, and 54, which all affirm this trend. Furthermore, specific financial data supports this assertion. On page 55, it is noted that net cash flows provided by operating activities was $50.3 million for the fiscal year ended February 28, 2026. This figure reinforces the notion of positive operating cash flow, as it indicates a significant amount of cash being generated from the company's core operations. The conclusion on page 56 explicitly states that the company is generating positive operating cash flow. Additionally, page 67 provides further confirmation with its net cash provided by used in operating activities figure of $50.3 million for 2026. The final affirmation comes from page 72, which categorically states, yes, under the heading Operating Cash Flow. The company's debt level has experienced mixed results over the past year. On one hand, a slight decrease was observed from $415.4 million to $410.3 million between 2025 and 2026. However, another instance shows an increase from $195.3 million to $196.5 million during the same period. Furthermore, the note's fair value decreased significantly from $289.5 million in 2025 to $241.7 million in 2026. Regarding interest expenses, there is a minor increase from $3 million to $3.1 million between 2025 and 2026. In contrast, two instances show that the interest expenses remained unchanged at $6 million for both years. Overall, while some fluctuations are noted, no significant changes in debt levels or interest expenses have been observed. The financial performance of segments and regions varied significantly in fiscal 2026. Secure Communications stood out as a top performer, exceeding guidance for the year. In contrast, licensing underperformed due to timing issues with new licensing deals. Regionally, international markets shone brightly, accounting for a substantial portion of revenue. Europe, Middle East, and Africa, EMEA, also saw an increase in revenue by $5.1 million compared to the previous year. Other regions experienced a notable surge in revenue, rising by $12.6 million. However, North America was a disappointment, with revenue decreasing by $3.5 million compared to the previous year. Despite this decline, North America still managed to show an increase of 44.7% in revenue for 2026. Management's outlook on the company is optimistic, with a focus on regulated industries and vertical-specific use cases. The go-to-market strategy supports both perpetual and subscription-based business models, providing commercial flexibility while generating recurring and usage-based revenue streams. In terms of financial performance, management expects QNX revenue to reach $60-64 million in CONE 2027 and $290-307 million for fiscal 2027. With secure communications revenue expected to be in the range of $66-70 million in CONE 2027 and $270-280 million for fiscal 2027. The company also expects adjusted EBITDA to reach $69-81 million in fiscal 2027 for the QNX segment and $57-65 million for the secure communications segment. Management is focused on maintaining cash balances, managing working capital, and meeting liquidity needs. They believe their financial resources will be sufficient to meet current commitments and future operating expenditures. The company's stock-based compensation plan has performance goals tied to operating metrics and total shareholder return, TSR, indicating a focus on long-term growth and profitability. Overall, management is confident in the company's ability to generate revenue and achieve its financial targets, with a focus on maintaining cash balances and meeting liquidity needs. The company has made several significant acquisitions and divestitures in recent times. In terms of acquisitions, the most notable ones include the sale of Cylance endpoint security assets to Arctic Wolf Networks, Inc., for a total consideration of $160 million in cash and 5.5 million common shares. This acquisition is part of the company's efforts to expand its cybersecurity capabilities. Another significant acquisition was the issuance of $150 million aggregate principal amount of 1.75% extendable convertible unsecured debentures, also known as extension debentures. This move allows the company to raise capital and strengthen its financial position. On the other hand, the company has made several divestitures in recent times. The most notable ones include the sale of Blackberry Certicom, which is part of the licensing division, and Blackberry Radar, which is part of the QNX division. These divestitures are aimed at streamlining the company's operations and focusing on its core business. Additionally, the company has also sold Cylance endpoint security assets to Arctic Wolf Networks, Inc., which is a significant move in the cybersecurity space. Furthermore, the company has discontinued certain operations and repaid $365 million aggregate principal amount of 2020 debentures, which are aimed at reducing debt and improving its financial health. The company's financial activities have been focused on share buybacks rather than dividend payments. On May 12, 2025, a share buyback program was initiated, marking the beginning of this strategy. Throughout the year, the company successfully repurchased 15.6 million common shares at a total cost of $60.7 million. This significant investment in buying back its own shares demonstrates the company's confidence in its future prospects and its desire to return value to shareholders. The fact that no dividend payments were made suggests that the company is prioritizing share buybacks as a means of enhancing shareholder value. That concludes the financial summary for Blackberry Limited. Feel free to comment below, and I will be happy to answer them when possible.